Good afternoon, viewers and listeners. Welcome back to this very special episode of the Free Marketeers podcast. Thank you to all those of you who are waiting, those of you who are joining us now. We really appreciate that. Today, Jacques and I are joined by Dawie Roodt, the chief economist at the Efficient Group. Dawie, thank you once again for being with us. Always a pleasure to talk to you.
Thank you very much, Chris. Thanks very much for the invite.
Dawie, yesterday we had the supplementary budget by Finance Minister Tito Mboweni. I think a lot of South Africans were waiting for big changes, big news to tell them how bad things were going to be, and hopefully how the minister was going to solve all our problems with his silver bullet or many silver bullets. Unfortunately, I think that wasn't the news, but I think pretty much the floor is yours to give us your take on what happened. We might take some questions at the end. Viewers, to you, of course, please feel free to email Dawie with questions if you'd prefer. His email address is dawieroodt@efgroup.co.za. I'll also link to that in the description. But yeah, Dawie, let's kick off there. Just your broad overview of the latest budget by Minister Mboweni.
Okay, thanks, Chris. So I'll take about 25 minutes or so, and I'll see if I can touch on the main things. But I think important place to start is maybe just to go back a little bit to see where we were before this this most recent budget. By the way, I've been analyzing the state finances for probably around 30 years or more than 30 years. And my background is that I analyzed state finances while I was working as an economist at the South African Reserve Bank, and I was involved with preparing budgets then quite a lot. So, and for the past, like I've said, more than 30 years, I've been looking at every budget, each one of them, and I've analyzed each one of them. My background in academic is also that I've got some qualifications on pretty much the fiscal side of things, on taxes specifically. So that's what I've been doing for most of the past, say, 30 years or so. And as far as I know, this is the first time that we have an emergency budget of this nature. So this is an absolute first. I've never seen anything like this. It just goes to show how important it is and how deep in trouble we are. But before I get to the budget, and there's not really much to say about the budget, but before I get to this budget, and it's not really a budget in the sense that changes were made. It's a budget in the sense that we were given a bit of an update on most of the important numbers. Most of the important numbers were out already. But what happened before that, and of course the politicians are blaming the virus for everything. Let me be very, very clear about this. This is not the virus causing all this damage. At least it's the measures that have been put in place to contain the virus that is causing some damage. But the main damage has been done before the virus, and that has been done by a destructive government with the wrong policies for many, many years. For the past 10 years, in fact, even for longer than that. Let's go back to, say, 12 years ago, when Pravin Gordhan was our Minister of Finance. He took over from Trevor Manuel. Then state debt levels was just over 20% of GDP, and the subsequent 10 years, mostly under Pravin Gordhan, but of course there were some other guys as well, state debt levels totally got out of hand, and it was primarily on two expense items. The one was on the wage bill, which increased quite substantially. And the second one was on the bailouts to the state-owned enterprises primarily. So those two expense items increased quite a lot, primarily under the leadership of Pravin Gordhan, but some other guys as well. And of course, there was Zuma, and there was the financial crisis 10 years ago or so. But it was primarily because of those two expense items that state debt levels doubled in a matter relative to GDP in a matter of about 10 years. Up to the end of last year, the South African economy was in a very slow growth trajectory. In fact, for the past 5 years, every year, South Africans have been getting poorer on average every year. And this year, obviously, we're going to see a significant increase in poverty in South Africa. The state debt levels was around about 60% of GDP. It increased, more than doubled in 12 years, to 60% of GDP. The Minister of Finance budgeted for economic growth of close to 2% this year, before in February. He budgeted for a fiscal deficit of just below 7% of GDP, which is already unsustainable. And he budgeted for state debt levels to increase to about 65% of GDP in the current financial year. So that's more or less what the Minister of Finance budgeted for. Now, if you analyze that numbers, and if you go back to my presentation, which I did for this institution, at the budget then, I did say that it's totally unsustainable, and I did say that we are heading for a fiscal debt trap already then. So we were in very deep financial trouble already, heading for a fiscal debt trap. And again, the South African economy was under pressure, and we were officially in a so-called technical recession. So we were in trouble before the virus, and then it's the time of the virus, and things got from very bad to exceptionally bad, and that's where we are now. The economic crisis that we are facing now can be compared to the depression at least, and that is nearly 100 years ago, or even worse. In fact, the unemployment levels in South Africa this year is probably going to be well above what we saw during the Great Depression, and we're going to see at least 2 million people losing their jobs. That's my estimates. I expect the economy to contract by about 10% this year. And of course, that will lead to a huge increase in poverty in South Africa. And I expect around about 100,000 businesses that will close down. So those are my expectations. Coming to this supplementary budget of the Minister of Finance that was delivered yesterday, I'm going to go through some of the main numbers and just mention some of the main numbers, but I would like to spend some time more on something else, between the lines, messages that I got from the Minister of Finance. So let me go through some of the main numbers. The Minister of
Dawie, sorry,
yes.
Dawie, if I can jump in, I wanted to, just one thing I think interesting, the unemployment numbers that were released earlier this week, we're at 30.1%. I just want to make clear, and from my own understanding, that's for Q1, correct?
That's correct, yes. That's the end of March.
So,
that's the beginning of the crisis. So we saw an increase. So I think the impact of the crisis will only be felt in the second quarter. I expect economic really to contract quite sharply in the second quarter. And of course, that will lead to a much stronger increase in unemployment. Always keep in mind, when the economy slows down, you don't see immediate an increase in unemployment. Businesses actually try to keep people employed for as long as they possibly can. And the opposite also happens when the economy starts growing. People don't immediately start employing more people. It takes some time. So even if the economy starts growing for whatever reason, expect unemployment to remain relatively high for. So the really bad numbers are only coming up. This is just the first that we saw yesterday, that was released yesterday. All right, getting to the minister's numbers, some of the minister's numbers. Now he expects economic contraction of about 7%, which I think is a bit too optimistic. The minister says that he expects state revenue to be about 300 billion less than originally estimated. I agree more or less with that, and I would like to spend some time on that. He will spend just over 100 billion extra. There will be some reallocation here and there, but on a net basis, an additional, say, 100 billion or so extra spending, which means that the fiscal deficit will be more than 400 billion more than originally estimated in the budget, in February budget. Now, keep in mind that the economy is a smaller economy, and with a bigger fiscal deficit, that the ratio to GDP will now, of course, be much bigger, not only because of the increase in the fiscal deficit, the nominal number, but also because of the smaller economy. And the minister now expects the fiscal deficit to be, now there are various definitions, I'm going to round it off, but he expects the fiscal deficit to be around about 17%. Then let me give you an example of various definitions. There's a so-called consolidated budget, which includes the unemployment insurance fund as an example. And then there is the so-called main budget. So the consolidated budget will have a slightly bigger fiscal deficit, while the main number, the one that I usually keep track of, and what the Reserve Bank also reports on, will be slightly below 15%. So, but it doesn't matter. Let's talk rough numbers. And the rough number is that the fiscal deficit now, according to the Minister of Finance, is roughly going to be around about 15% deficit. In nominal amounts, that means that the fiscal deficit will be close to 800 billion rand. That needs to be funded somewhere. The Minister of Finance is planning to fund that by borrowing abroad. He's planning to fund about 125 billion abroad additionally, about additional amount of money of about 100 billion, bringing it the total to about 125 billion, mostly coming from the IMF. And he's also planning to increase local borrowing. Of course, in the bond market, he's expecting to borrow more in the bond market. But if you look at if you analyze the borrowing, you will find that the Minister of Finance is moving his funding requirement more to the shorter end of the yield curve. So he's going to borrow more money, short-term money, instead of long-term money, which makes sense because long-term money is too expensive at this stage. The yield curve has actually gone up, meaning that longer-term interest rates are higher than short-term interest rates. But the danger is that if you borrow in the short term, then of course you have to repay in the short term. And that will put that can potentially put a lot of cash flow pressure on the fiscal account, say within 2 or 3 years or whatever. So that is just something that I think we need to keep in mind. On the spending side, most of the spending numbers are out already. We know where the money is mostly going to. Money is going to support the extra grants. There's a huge amount of money going there, around about 40 billion. Those grants are supposed to be temporary. I don't think it's going to be temporary. And some additional spending on the local authorities, getting 20 billion extra, more on health services and the like. A total amount just over 100 billion or so will be spent additionally in the current financial year. So we're talking about the 500 billion extra stimulus package. It's not going to be 500 billion. It's only going to be about just over 100 billion extra money. And the biggest chunk of that will be in the form of a 200 billion rand loans that will be made available via the banking sector. And that seems to be not that successful because only 7 billion of that 200 billion has been lent out so far. I want to spend a little bit of time on the revenue figures and to see how the various taxes are reacting in the current environment. The most important revenue source for the Minister of Finance is personal income taxes. Personal income taxes obviously will come in well below the budgeted estimates. Obvious because people are losing their jobs, people are getting smaller increases, or people are taking a pay cut. So obviously in this sort of environment, there will be less personal income tax collections as well. So that's going to be under a lot of pressure. That's the most important revenue source to the Minister of Finance. The second most important revenue source is value-added tax. These are some of my estimates, by the way. So value-added tax will come under even more pressure. And there are two reasons for that, two obvious reasons. And the one is that we closed down. People didn't go to the shops because you stay at home. So we didn't buy. That's one reason. The second reason is simply because people, they lost their income. And you can't buy. Even if you could buy, you can't buy. And then some other reasons like the close down of alcohol and cigarettes is still closed down and so on. So those are some of the reasons why some of these indirect taxes, particularly value-added tax, will come under. And percentage-wise, the under-collection and VAT will be more than the personal income taxes. The reason is because personal income taxes, people that pay the bulk of personal income taxes are people that are rather well off, and many of them haven't lost their jobs. It's the people, the lower income categories that mostly lost their jobs, and the well-off people are better qualified and better cushioned. They can cushion much better protected and so on. So they, of course, many of them have lost their jobs, but many of them have not lost their jobs. It's mostly the lower income categories that's lost their jobs, and they're not the main personal income tax payers. So the personal income tax under pressure, value-added tax under more pressure, and the big one, the third most important tax to the Minister of Finance, is company taxes. Now, company taxes is going to be significantly under the budgeted estimates, and there are two main reasons for that. The one is that, perhaps three. One is that the local economy is under pressure, and if the local economy is under pressure, companies don't make profits. If they don't make profits, they don't pay taxes. But additionally, we have a number of international companies in South Africa, and the international economy is under tremendous pressure. And if the international economy is under tremendous pressure, then of course they will also not be paying taxes locally. And the third reason is there was some tax relief by the Minister of Finance, not that much, but some tax relief, especially on the smaller companies, which will result in slightly less company tax collections, but not that much, because the smaller companies in South Africa hardly pay tax in any event. It's the big guys that pay most of the taxes. Then some of the other taxes will also come in below budgeted estimates, like the fuel levy is an important one, and the sin taxes will be under a lot of pressure as well, because we are still not allowed to smoke, and we were not allowed to buy booze for quite a long time. But the three major ones, personal income tax, value-added tax, and company tax, coming well below the budgeted estimates, and it's especially VAT and company taxes that will come in well below the budgeted estimates. Now, the Minister of Finance then said, if we do nothing, the fiscal deficit will stay at 15%. It will stay well above 10% over the next couple of years, and within a short period of time, the debt to GDP ratio will balloon to totally unsustainable levels. That's where we were heading for. And of course, the Minister of Finance had a couple of choices here. He can try to increase taxes. It's not going to work because the taxpayer is overburdened already. He can try to raid the pension funds, and there's some talk that they wanted to do that. He decided, so far, they've decided not to do that yet. At least Tito Mboweni hasn't said anything about that in this supplementary budget of his, although the rest of his colleagues have been saying things in that direction. raiding the pension funds or so-called prescribed assets. Or he can do the unpopular thing, and that is cutting state spending. And that's what he suggested. He is suggesting to cut state spending with a massive margin. He's proposing to cut state spending to the tune of about 230, 240 billion rand over a very short period of time, over 3 years or so. At the same time, he's proposing some tax increases, only about 5 or 10 billion rand per year over the next 3 years or so. But 40 billion tax increases is really insignificant compared to the amount of money that he's planning to cut on state spending. Now, I've done some numbers on state spending, and here's one particular number. First of all, state spending as a percentage of GDP, excluding interest. State spending as a percentage of GDP, according to the minister, these are the proposals of the minister, will fall as a percentage of GDP. Now, that's unheard of. The state has been getting bigger and bigger and bigger for many, many years now, and to cut back on state spending and actually to reduce that significantly as a percentage of GDP, that really takes some doing. And then here's one particular number that I've calculated. From this year to the next financial year, the Minister of Finance is proposing to cut the discretionary part of state spending. That's the part excluding interest. So that discretionary part of state spending is planning to cut that by 100 billion rand. Now that's a lot of money. I'm not talking about a reduction in real terms. I'm talking about a nominal reduction of 100 billion rand. Now here's the political part, the part that really interests me, and then I will be nearly done with some of my views on the budget. Here's the interesting part. If you go through the supplementary budget review, this is the document, and I've gone through the whole thing. It's not a speech. The speech is, of course, is very important, and you read between the lines what's going on, what the minister is trying to tell us. And he said that in the budget, but in the supplementary review, go read through the supplementary review. And what's interesting to me, in both these documents, the minister keep on saying that he's discussed this with cabinet, and cabinet has approved these measures, and cabinet will support him in these measures. Now he kept on saying that for a number of times, and it made me think of Shakespeare in one of his plays saying, "The lady protests too much." So here is what I think is going to happen. I think this is the main story. Tito Mboweni realizes that we are in very deep trouble. I mean, you cannot overemphasize that. Tito Mboweni has decided to cut back on state spending, which is the thing, obvious, the right thing to do. We also should support that. Of course, many people are saying that his budget is far too thin on detail. That's true, but I think it's a bit unfair because you can't prepare something like this within a week or so. You could do better, I guess, but it's a bit unfair, some of the criticism. What is important is the big numbers. And we're going to hold him to the big numbers, and we should hold him to the big numbers. So he's decided to cut back on state spending. I do not know if he's spoken to his colleagues. He said he did. He said the cabinet is supporting him. But I have very little doubt that we can get our popcorn and cool drink ready and get a very comfortable seat somewhere, because we are about to see a clash of some sorts. And here are some of the clashes that I think is going to happen. Unfortunately, we're going to pay the price for that. The first one is that I think there's going to be a leadership clash within the ANC. And until last week, Pravin Gordhan, as an example, did mention that he wants to see South African Airways fly again and all sort of other silly things. He's going to get money somewhere for SA Express. He did say so, according to news reports. And there's nothing about South African Airways in this budget of the minister. The only state-owned enterprise that's going to get anything extra is the Land Bank, 3 billion, but nobody else. And the minister actually said in his review, that's another reason why you should read the review, he actually used the words that some state-owned enterprises will go under. So read South African Airways. So the clash here is, there will be a clash between Pravin Gordhan and Tito Mboweni at least. A second clash is probably going to be between Tito Mboweni and the president himself, because the president himself said it's important to have, and I'm only using South African Airways as an example, there are many others. The president himself did say that we need an airline. We need an airline in South Africa. So does he know about Tito Mboweni not giving any money to South African Airways? Because they need the money now. They need an additional 10 billion now, not like in 2 months, they want an answer now, because the business rescuers are finalizing their plans, and they are under the impression that they're going to get 26 billion from Tito Mboweni. He didn't give them anything. There will be some sort of leadership clash. I also do not believe that the rest of the cabinet is aware of the kind of cutbacks that will be expected from them. That Tito Mboweni actually sit down with each one of those ministers, overpaid ministers with these huge administrations, and explain to them that you're not going to get all this money that you thought you're going to get. Everybody will be happy to cut somebody else's budget, but will they be happy to actually cut their own budgets? I'm not so sure. So the first question I'm asking, and the first clash, is do the other guys actually know this, the cabinet, and do they actually support this? I'm not so sure. And in fact, I don't even believe that they fully understand what will be required from them. So that's the first thing. I believe there will be some sort of, and by the way, looking at Tito Mboweni's at the press conference after his speech, he's a tired guy. He's usually a flamboyant guy, full of jokes. That's not the case. He's lost. He's not the same person. He's not the same Tito Mboweni that we became accustomed to. He's tired, and he's really battling to find the right words. I could see that, and he's also not sure about many numbers. So I'm not so sure his heart is in this, but he's put, without a doubt, the right direction on the table, but I don't believe he will get the support. And also important, I haven't heard anything of the president today. I would have liked to hear something from the president standing up and saying, I support my Minister of Finance. It's going to be tough, people, but we're going to do this. Something like that. There wasn't anything like that. So the first clash that I suspect is going to happen is a leadership clash within the ANC, and I think it's imminent. It's going to be interesting to see who's going to win this fight. The second clash is more of an ideological thing. I did say that Tito Mboweni had the option. He could go for the socialist approach. He could have increased all sort of taxes on the rich. He could have raided the pension funds, prescribed assets, stuff like that. And without a doubt, there's a lot of support for that in the alliance. He didn't do that. He's also reducing the size of the state. And he's making mention about that we have to zero budget. Zero budget simply means that we have to defend every single expense item on the budget from scratch. You cannot simply assume that you're going to get more money. Now, why this is important? Because it seems as if Tito Mboweni is trying to change the ideological track of the alliance, basically. So instead of this centralized socialist developmental government kind of approach that we've become accustomed to, and we hear the word developmental state all the time from our political leadership, Tito Mboweni is saying, no, we're not going to take that route. We're going to cut back on state spending. If you want money, you have to prove that you actually need the money, and we're going to close down the state-owned enterprises. So that's the second clash. That's the second question. Is there going to be a change in ideology in the tripartite alliance? Because I am pretty sure that there are many members in ANC, and without a doubt in the Communist Party and also in COSATU, that will not go along with that. The second or the third clash, and that's the interesting one, and that's perhaps the one that is going to be the most entertaining to watch, is the clash within the alliance. Now, the Minister of Finance, I mentioned, he's going to cut state spending by approximately 100 billion from this year to next year, and inevitably that means that people will lose their jobs in a number of state-owned enterprises. Not only that, people will lose their jobs, hopefully, in the civil service. I'm talking about the national government. And it is also, without a doubt, that people will also not get the same kind of salary increases that they've become accustomed to up to now. Now, remember, COSATU today basically represents the civil service. More than 50% of COSATU members are civil servants. And they're also part of the tripartite alliance. And COSATU has become accustomed to the fact that they have become the tail that is wagging the dog. So the question now is that whoever is in charge of the ANC, let's assume Tito Mboweni has got the support of the cabinet and of the ANC, there must be a confrontation between the ANC and COSATU to determine who really is the senior partner in the alliance. So those are the three main battles that we are going to witness perhaps over the next number of weeks. Kusatu this morning very aggressively opposing the budget, calling it an austerity, which it isn't, by the way. A fiscal deficit of 15% of GDP is everything but an austerity budget. But Kusatu came out very strongly. And Tito Mboweni, he's thrown down the gauntlet. He's on a collision course with, we have no doubt, with many of his colleagues in cabinet. There's an ideological thing. And of course, there's a collision course with Kusatu. That's also will be playing out in front of our eyes over the next couple of days and weeks and months. Who's going to win this fight? I'm afraid I'm not putting my money on Tito Mboweni. The budget that he's tabled here, this is the direction we have to go. This is something he should have done long ago, years ago. He did mention that when he was appointed as Minister of Finance, but he didn't do much in his budget. He did try to move in that direction, but it wasn't this kind of thing. And certainly he wouldn't have gotten the kind of support, political support to table something like this. But now that all our faults and all our deficits and all the mismanagement of previous years are really in the spotlight, maybe he can pull this off and maybe he can turn the ship around. With these sort of numbers, if we can achieve it, it can be done. But I must tell you, I'm not hopeful. I don't think he's going to succeed in doing this. I don't think he's going to get the support of his colleagues. I certainly don't think he will be able to ideologically turn this ship around. And I'm not so sure he's going to win the fight with Kusatu. We have to remember that the ANC and the Tripartite Alliance today, although they use ideological terms and terminologies, the ANC consists today primarily to live off the state. And that's what they've been doing for years. It has become a huge burden to South Africa. The ANC and the Alliance is a massively destructive force that's done immense damage to the South African economy. But it's nice while it lasted, because many, many people got fabulously rich because they're part of this whole patronage. And in fact, just one simple number, 30,000 civil servants are paid more than R1 million per year. Can you imagine? 30,000 of them. But that party has come to an end now. It will come to an end. And I've got a suspicion Tito Mboweni is going to be the loser. If he is the loser, the country is going to be the loser. If he's the winner, the South African economy, the recession in South Africa will be longer, it will be deeper, and it will be very, very painful. But in the medium term, we will get out of this if we can implement this. So let's hope Tito Mboweni will be able to implement this. If Tito Mboweni is not going to be the winner, I don't think he's going to make it. If he doesn't get the support, and maybe even if he resigns, if he go back to his farm and look after his avers rather and cook and tweet, then I'm afraid it will be business as usual. The plunder will continue. The mismanagement will continue. The economy will keep on sliding in the direction we have the last couple of years, and it all will end in very, very high levels of inflation. We still have the Reserve Bank under good management and a couple of other institutions doing a relatively good job. But we've had a government that's done immense damage. Tito Mboweni is trying to turn this around. Is he going to be successful? Only time will tell. But make sure you've got a comfortable seat, a lot of popcorn and cool drink, because what's going to happen over the next couple of weeks and months and days is going to be really interesting. And I think at long last, some of these fights, some of these conflicts that should have been resolved many years ago will inevitably be resolved now, and the sooner the better. Okay, that's it. Thank you for listening to me, Chris and Jacques. If there are any questions, it took me nice 30 minutes, half an hour. So I'm spot on time. If there are any questions, I'm happy to take those.
Thank you, Dawie. As always, you have an unmatched ability, I think, to help us make sense of these numbers. And it was, at least to me, maybe I'm going to let my optimism run with me now, but to hear that you were striking one or two more optimistic notes. Jacques, I'm going to throw to you next. I just wanted to ask you, Dawie, just something I was thinking about. Do you think Mboweni has already had some feedback from organizations such as the IMF or World Bank in terms of what they want to see South Africa doing forward? Do you think he's already?
Yeah.
I mean, it's been clear that we've approached these organizations, but do you think they've given him some clear guidelines, or in terms of landing lights on the airstrip of what they want to see for the South African economy and the South African government going forward?
Yeah, certainly. In fact, he alluded to that. He did mention that they're busy with very tough negotiations, to use his words. So yes, I'm pretty sure that the IMF and some of these other institutions will advise him on a couple of aggregates that are important to them. So yes, I'm pretty sure they've given him some a landing, sort of an indication how to land this broken aeroplane. But not only that, something else that I was thinking, if I'm listening to this budget, looking at the main numbers, and assume we can achieve these numbers, like what I've said, I'm not so sure we can, but assume we can achieve these sort of numbers, then I'm pretty sure that the rating agencies will be quite happy with that. So because it's a move in the right direction, they're planning to stabilize state debt at 87% of GDP. Then if you can do it there, if you can manage to do that, and you can prove that you can actually do that and get a very tough budget through, the next one, February next year, will be the very important one, then I think the rating agency will be quite happy with us. Unfortunately, we've lost so much confidence in this government. They keep on saying one thing and keep on doing something else, that there's a huge trust deficit that Tito Mboweni first have to cover before we really trust him. But the big numbers are right. If we can achieve that, it will be good. But like I've said, it's much easier saying than doing.
I'll throw to the man in the red tie. Jacques, any thoughts or questions you have for Dawie?
I just quickly want to go to the comment section, the last part on YouTube. Dawie asked, as a method of raising more tax revenue, what do you think about cutting direct taxes slightly and increasing consumption taxes like that to raise more tax revenue? If increasing direct taxation will tax avoidance and capital flight, how about incentivizing potential entrepreneurs to stay in the country but cutting direct taxes for now, while the revenue shortfall can be made up through consumption taxes?
Yeah. Well, yes, that's an ideal world. That's something I certainly would have done to reduce the various income taxes. There are a couple of things that I would do if I was the Minister of Finance in terms of taxes. First of all, I will simplify the system. It's far too complicated. And then there are a couple of immoral taxes. So capital gains tax is nothing but an immoral tax. But on a high level, certainly, if there's any one of the income taxes that I would reduce, it certainly will be company taxes. I would reduce company taxes. And if you analyze company taxes, you will find it's a handful of companies that pay the bulk of the company taxes in any event. So if anything, I will reduce company taxes, certainly, and I will try to increase some of the indirect taxes. But instead of increasing the indirect taxes necessarily, all you have to do is just get rid of some of these zero-rated items that are currently zero-rated in VAT. And those things are very difficult to do politically. But yes, that will perhaps be the better solution. If there's one indirect tax that I would increase that is politically also not easy to do, but it's easier than increasing VAT, it will be an increase in the fuel levy. So increase the fuel levy quite a lot. You can actually do that and get away with that. And reduce company tax. That I guess will be a good approach. But there are so many things that can be done to improve the tax system. But on a high level, I agree with the suggestion on indirect taxes and to reduce direct taxes, yes.
Okay, and then just a second question from me. So we've spoken about zero-based budgeting, basically starting from scratch, having to justify all expenditures, trying to promote an atmosphere of accountability. But there's another system rooted in zero-based budgeting called zero-deficit budgeting, which was first introduced in 2011 in Malawi, if I'm not mistaken. Basically, what it says is that you always start from zero, but whereas zero-based budgeting doesn't necessarily preclude all deficits or borrowing to cover certain expenditures, zero-deficit budgeting says even though you may start from zero, there is a very stringent ceiling which you cannot breach. And it effectively places a moratorium on further borrowing, especially borrowing to pay off the financing costs of previous instances of borrowing. So I just want to get your opinion on what you think of a system that combines zero deficit and zero-based budgeting.
Yeah, no. I think the idea is good, but here's a suggestion, a practical suggestion. Why don't we appoint, let's call it the fiscal committee, an independent fiscal committee, like what we have in the form of the Reserve Bank. The Reserve Bank is supposed to be independent. Monetary policy is independent. If they think inflation is a problem, they increase interest rates, and the politicians don't like that, which is good to have an independent central bank, kind of. Why don't we introduce a similar thing? We call it the fiscal board, and we give the fiscal board one target, and that target is to have a balanced budget over a cycle. The cycle can be the economic growth cycle. It can be 3-4 years or whatever the case might be. And we give the target to this fiscal committee, an independent committee. We give them one instrument, and that one instrument is value-added tax, VAT. So that we tell them, listen, the politician's going to spend money as whatever they want to spend. Your job is to make sure, using VAT, to make sure that we have a balanced budget over the cycle. So if the politicians decide to start spending more money, your job, and we're going to measure you on this, is to make sure that we balance the budget over the cycle, and your job then is to increase VAT. And it happens independently. You're totally independent. You are appointed. You are not elected, like the Reserve Bank. And we use this fiscal board to balance the budget over the cycle, achieving pretty much what you're suggesting now. Because the politicians, you simply cannot trust politicians. Politicians, for example, politicians always tell us if we all pay our taxes, we will all be paying less. That's absolutely bull. Whenever we pay more, they simply spend more. The only way that Tito Mboweni is cutting back on state spending now is because we literally ran out of money. There's no more money. I promise you. If somehow he could get some extra money in somewhere, he certainly would not have cut back on the state spending. He would have kept on spending more and even more in years to come. So a suggestion like a fiscal board is something that I think is not a bad idea, because they keep on spending more, and the moment they start spending more, then you will increase VAT. The fiscal board will automatically increase VAT in order to balance the budget over the cycle, for instance, achieving pretty much what you're suggesting now.
And then just one final question. So Tito said that, Minister Mboweni said that they expect to stabilize the debt and narrow the deficit, and they expect to cap debt 87.3% of GDP in 2024. Do you think this is a realistic target? Because other estimates from Moody's as well estimate that it will balloon to over 100% of GDP by 2024. So do you think it's realistic to set that target?
It can be done. I don't agree 100% with all these numbers. I mean, I differ with the revenue figures. I differ a little bit on economic growth and that sort of stuff. Not by much, but a little bit. So I think it's a little bit on the optimistic side. To get the debt to stabilize at below 90% is going to be seriously difficult to do. It's not impossible, but I think it's unlikely. But the big question really is not where we're going to stabilize debt. Of course, we have to stabilize debt. The big question is, will he be able to cut back on state spending to a significant degree, which I really doubt. So I guess the answer to that is, and it's not a political, it's not a practical answer. It's in practice, it is possible to do that. You can do that if you implement real strict measures and really cutting on state spending. It can be achieved, but I don't think so. I don't think he's going to get the political support for that. That's the most important obstacle. But apart from that, I just don't think the economy is going to grow at 7% this year. I think it's going to contract by 7. It's probably going to contract by more than that. And next year, the year thereafter, and so on, the economy is also not going to grow. So yes, no, I don't think we're going to get it there. I think debt will exceed 90% very soon, and then it's going to become even more tough to turn the ship around. And that's the reason why Tito has put these sort of numbers on the table, because this is what we have to do. It can be done practically, but the reality is that we have a government that's far more interested in spending money than saving money.
Yeah, thank you, Dawie.
Okay, thanks for those questions, Jacques. I think those are quite good to elucidate some of the finer points. Dawie, I think we're going to wrap up on that note. Once again, thank you so much for your time, for your insights, your expertise. It's always a privilege for us to get to talk to you, so thank you for that. To those of you who watched live, thank you very much for joining us and giving us your time. We hope you found it insightful and useful. Jacques, to you, again, thanks for being on another episode of our podcast. Always a pleasure to get to talk to you as well. Viewers and listeners, thanks for your continued support of the Free Market Foundation. Please consider donating to the FMF if you have not yet done so. We greatly value your support, and it means a lot to us that we can continue fighting for the right ideas and hopefully pushing South Africa in the right direction. As a final reminder, please, if you have any questions or more questions for Dawie, please email him, and his email address is dawieroodt@efgroup.co.za. You can also find his email address below this video in the description. Please remember to like the video. Please share it on your different social media platforms, and keep an eye out for more from us in the future. For now, we'll say good night, good evening, have a good weekend coming up, and we'll talk to you all again very soon on the next episode of the Free Marketeers. Bye-bye.